If you receive Social Security, SSI, SSDI, survivor benefits, or spousal benefits, you need to pay very close attention right now. Because starting immediately after Christmas, tens of millions of Americans will receive official letters from the Social Security Administration that can directly affect their taxes, their refunds, and in some cases, the amount they owe the IRS. Many people will treat these letters like routine paperwork. That would be a serious mistake. 2025 is not a normal tax year. It is a transition year, shaped by new laws that change how Social Security income is treated, how much of it may be taxed, and whether federal taxes were withheld correctly during the year. In the coming days, the SSA will send out forms that determine how your Social Security income is reported to the IRS. For some people, these changes may result in refunds worth thousands of dollars. For others, failing to understand these documents could lead to unexpected tax bills. In this video, I will explain exactly what letters are coming, when they are arriving, and why they matter more than ever before. We'll break down the December payment schedule, the new senior tax deduction, the impact of recent legislation, and the specific steps every beneficiary should take before filing their taxes. Stay with me until the end, because this is not about rumors or speculation. These are confirmed changes that affect real money, real benefits, and real people. And if you want clear, verified updates like this without confusion or panic, make sure you're subscribed. Okay, let's jump right in. We're going to unpack two really big changes to Social Security for 2025. And you'll want to stick around because these changes could seriously affect your next tax refund. We'll make sure you're ready for what's coming. Now, this isn't just some minor adjustment. We're talking about something that's going to directly impact the taxes of almost 74 million Americans. Yeah, you heard that right. If you get Social Security for retirement, disability, or as a survivor, this is for you. So right after the holidays, you need to be on the lookout for a couple of official documents. They're going to be absolutely critical for your 2025 tax return. We're going to walk through exactly what to look for, why this year is so different, and the simple things you can do to get it all right. Okay, first things first. Let's talk about the exact forms you need to have on your radar. The Social Security Administration, the SSA, is sending out one of two key documents to every single person who gets benefits. All right, so if you're a U.S. citizen, you're looking for Form SSA-1099. If you're a non-citizen beneficiary, you'll get the SSA-1042S. But here's the thing. They both do the exact same job. They tell you and the IRS the total amount of benefits you got in 2025. This is the number you have to use when you file your taxes. No exceptions. Okay, get your calendar out because these dates are important. Starting on Christmas Day, December 25th, you can actually go online to your My Social Security account and find your tax form right there. If you're waiting for the paper copy, the SSA starts putting those in the mail the very next day on December 26th. So definitely keep an eye on your mailbox. So you might be wondering, what's the big deal about this form this year? Well, it's a huge deal, actually. 2025 is what we call a transition year, and that's because two major new laws just went into effect that could totally change your tax situation. We're talking about how much you owe, or even better, how big of a refund you might get back. Okay, let's get into the first one. This is a brand new tax deduction created just for seniors. And honestly, this is a real game changer for a lot of retirees who are trying to lower their federal tax bill. So, what does it do? Well, this new law means that if you qualify, you can deduct up to an extra $6,000 from your income. Think about that. That can make a massive difference when it comes time to pay your taxes. And to put that into perspective for you, a single senior could now protect more than $23,000 of their total income from federal taxes. And if you're a married couple filing your taxes together, That number is even better. Now here is the really critical piece of this. This new deduction kicked in halfway through the year. So what does that mean? It means the government was likely taking out too much tax from your benefits because they were still using the old rules. The bottom line here is you could be looking at a much bigger tax refund in 2026 because of this. Okay, on to the second big change. It's called the Social Security Fairness Act. This one has been a long time coming. It was designed to fix a problem that for years has unfairly penalized people in public service. Folks who had their own pension but also paid into Social Security. And we're not talking about a small group of people. This affects over 2.8 million public servants. You know, people we rely on every day. Teachers, firefighters, police officers. For years, they've seen their Social Security benefits get slashed, or in some cases, completely wiped out. This law changes that. So, because of this new act, a lot of these folks have already gotten pretty big lump sum payments for the benefits they should have received in the past. We're talking checks for thousands of dollars. And just as important, their regular monthly benefit checks are going to be higher from now on. And this all circles back to that tax form. Whether you got one of those big back payments or you're just getting more each month, all of that extra income is going to show up on your SSA-1099. And it is absolutely essential that you report this new higher amount correctly to the IRS. You've got to get this part right. All right, so we've covered what's changing and why it matters so much. Now let's get practical. Here's your step-by-step game plan for this tax season. It's a simple 4-step process. Step 1. Starting December 26th, be a hawk. Watch your mail for that form. Step 2. When it arrives, don't just file it away. Open it up and compare the total benefit amount to your own records, what you actually got in your bank account. Step 3. If something doesn't look right, if the numbers don't match, you need to contact the SSA immediately. Get it corrected before you file your taxes. And finally, step 4. Make sure that this official form is what you or your tax person uses to file your return. That's it. Simple. Okay, these 2 new laws are definitely a big step in the right direction. It's good news. But let's zoom out for a second and look at the bigger picture, which is the constant battle between your benefits and the rising cost of living. Because even with this progress, there's this ongoing challenge, right? The yearly cost of living adjustments. You know, the COLA. They often feel like they're a step behind. They just don't quite cover the real-world cost increases that seniors face, especially when it comes to things like healthcare. And a big reason for that gap is how the government calculates it. Right now, the COLA is based on something called the CPIW. Think of it as a shopping basket for working-age people. But advocates have been saying for years that we should be using the CPI-E instead. That E stands for elderly, and it's a formula designed to track what seniors actually spend their money on, which gives a much more accurate picture of their real costs. Now, this idea to switch to the CPI-E isn't just a fantasy. It's been officially proposed in Congress, and if it ever passes, it could mean a boost of several hundred a year for you. But, and it's a big but, for right now, that reform is still stuck, waiting for a vote. So that brings us to our final thought for today. Getting a handle on these new tax rules for this year is absolutely your #1 priority. But as you're doing that, it's also smart to keep an eye on the future. Think about it. How would a change to that COLA formula down the road impact your financial planning? It's definitely something to consider. The most important thing to understand is this. The rules have changed, but the responsibility is still yours. The government does not automatically protect you from mistakes, missed deductions, or incorrect reporting. That's why these SSA letters matter so much. For many retirees, 2025 may turn out to be one of the most favorable tax years in a long time. The new senior deduction alone can eliminate federal taxes for a large portion of beneficiaries. Add to that the changes from the Social Security Fairness Act, and you start to see why careful review is essential. At the same time, this is also where problems can arise. Larger benefit amounts, retroactive payments, or incorrect withholding can easily lead to confusion if the SSA-1099 is not reviewed carefully. Filing taxes without checking these numbers is one of the most common and costly mistakes beneficiaries make. Looking ahead, there are still unresolved issues. Social Security benefits continue to lag behind inflation, and debates over how cost of living adjustments are calculated are far from over. Future reforms may improve this, but they are not guaranteed and they will not happen overnight. For now, the best protection you have is information and preparation. Check your mail, review your forms, ask questions early, and most importantly, don't assume everything is fine just because it was fine last year. I'll continue following these updates closely so you can make informed decisions and avoid costly surprises.